Good morning, children. So today we are going to do journal entry. First of all, we have to learn the meaning of journal, the definition of journal, the functions of journal, the features of journal and advantages of journal, and the rules of recording the transaction into the journal, that is known as journalizing. So first of all, the meaning of journal. So journal is a primary books of accounts in which financial transactions are first recorded in a chronological order. That is, chronological order means in the sequence of they entered into. That means date wise, as according to the date. So journal is a primary books of accounts in which the financial transactions are recorded as soon as it takes place. That means when the transaction occurred, when the transaction take place, the transactions are first recorded into the books of journal. So that's why it is called as in books of original entry. So journal is a books of original entry because the transactions are recorded as soon as it takes place. So this is the meaning of journal. So what is a journal? Journal is a books in which the transactions are recorded as soon as it takes place. The transactions are recorded in a chronological order. That means in the order of date, sequence. So the transaction, that means this journal is the first books of account. So we can say it is a books of original entry. So the definition of journal here. So journal is a chronological record of financial transaction of a business. So it is given here. Journal is a chronological record of financial transaction of a business. So journal is expressed books of original entry. Journal is a books of original entry because transaction is first recorded or written in this book. So thereafter only it is posted to the ledger. First transactions are recorded into the journal as soon as it takes place. So journal entry, an entry recorded in the journal is called journal entry. When we write the entry in the journal, so that is called a journal entry. So journalizing, the process of recording the transaction in the journal is known as journalizing. What is journalizing? Journalizing is a process of recording the transaction in a journal is called journalizing. So journalizing is a process. So after that, after the journal entry is passed, after journalizing, so posting. The transfer of journal entry to ledger is called posting. What is a posting? Posting is transferring from the journal to the ledger. It's called posting. Posting, the transfer of journal entry to the ledger account is called posting. So this is the terms expressed here in the journal. So function of journal. What are the function of journal? So journal helps to record the transaction in order they entered. As soon as it takes place, journal helps to record the transaction in a chronological order, in the order of date, the sequence of date. So the function of journal is to record the transaction in the order they are entered, to record both debit and credit aspect of transaction correctly. So in the we know that when the transaction takes place, two accounts head are affected, and one account is always debit, another account is always credit. So both these aspects are recorded. Debit aspect and credit aspect both are recorded in the journal. Which one is debited? Which account is debited? Which account is credited? Both aspects are recorded. So this is the function of journal. Both the aspects are recorded. Debit aspect and the credit aspect are recorded. So to facilitate posting of transaction into the ledger. So after the journal entry, so we post into the ledger. Journal helps to transfer, to post into the ledger. Journal facilitates posting of the transaction into the ledger account. So we pass the journal entry. After passing the journal entry, So at least two accounts here are affected. One account is always debit, another account is always credit in the journal. So those debit aspect and credit aspect, their particular individual account, it is posted in the ledger. So journal entry facilitates to transfer the transaction into the ledger. So when the transaction takes place, we do not write directly into the ledger. First of all, transactions are recorded in the journal. From journal, it is posted to the ledger. So this is the function of journal. So the features of journal are: journal is a record of transactions in a chronological order. That means journal is a record of transaction in a date wise, that is called as a chronological order. It is the books of original entry in which transaction is first recorded and thereafter it will be posted to the ledger. That means transactions are first recorded in the journal entry in a chronological order in the date of sequence. So this is the next. First one is transactions are recorded in a chronological order. Journal is a record of transaction in a chronological order. Next one is said that it is a book of original entry in which transactions are first recorded in the journal. So it records both the debit aspect and credit aspect, so that by completing the double entry system. So journal entry is a record which shows complete details of the transaction in one entry. So journal is a record which shows complete details of transaction in one entry. So when a transaction takes place, it is recorded in the debit aspect also as well as credit aspect also in the entry. So this is the functions of the journal entry. So now, after the features of journal entry, let's learn the advantages of journal entry. What are the advantages of journal? So advantages of journal are: number one, journal minimizes the possibility of error. That means the mistakes. So it helps to minimize the mistakes. The chances of doing the mistake or occurring the mistake is minimized. So the possibility of error is minimized because the amount of debit and credit are written side by side. So and the two can be compared to see total two sides of transaction are equal or not. So in this way, debit aspect is also recorded, credit aspect is also recorded, and we can see the debit and credit are always equal. If these two sides are equal, then it is correct. So in this way, journal helps to minimize the possibility of error, possibility of mistake. So this is the first advantages of journal. Number two is journal provides an explanation of the transaction, because after the journal there is a short explanation about the journal that is known as narration. So along with the entry in the journal, an explanation, that is narration, is written explaining the journal entry. So what is written in the journal entry? What is for the journal? What is about the journal entry? The explanation of journal entry is given in a short description below the journal entry, that is called narration. So it helps to understand the entry properly. By reading the narration also we can understand that entry is passed for what purpose. So in this way, journal provides an explanation of the transaction. Next, number three, journal provides a chronological record of all transactions. So transactions are recorded in the journal entry, journal in a chronological order, date wise. So the sequence or order they are entered. So it is recorded in a sequence of their occurrence. So in this way, the transactions are entered in the journal in a chronological order. So journal provides a chronological record of all the transactions. So we can find the date wise which transaction has taken place. So in this way, these are the advantages of journal entry. Now, this is the format of journal. So format of journal, first is date column, small column for date, then particular, where you have to write the debit, which account is debited, which account is credited, and then after that small column for ledger folio, LF is a ledger folio, and two amount column for debit amount and the credit amount. So first column is for small column for the date of transit date, then particulars. In particulars you have to write the account head, which account is debited, which account is credited. And in the ledger folio is a small column, then debit amount and the credit. There are two amount column, one is debit amount column, another is credit amount column. So first is date column, second one is particular column in which the account name are written. Along with that account name, there's a description, narration also is written there. So ledger folio, debit amount and the credit amount. So in this way, what are the steps of journalizing? First step is determining the account that are affected in the transaction. When a transaction takes place, the transactions are to be recorded in the journal. The transactions are first recorded in the journal. As soon as transaction takes place, we have to see which two accounts are affected. Which two accounts are affected. For example, the owner invested, Mohan is the owner of the business. Mohan started the business with rupees cash 50,000. Mohan invested in the business 50,000 rupees. So cash account is affected, capital account is affected. These two accounts are affected. We have to identify that two first. As we read the transaction, we should be able to identify the two accounts head. Furniture purchased for cash. Furniture account is affected, cash account is affected. These two accounts are affected in this transaction. Purchase goods for cash. Purchase account is affected, cash account is affected. These two accounts are affected. In this way, we have to identify the two accounts head, at least two account heads affected in that, involved in that transaction. So that is the first. After that, we have to determine which account is real account, which account is personal account. Now we have to analyze which account is debited, which account is credited. That there are two ways. One is traditional concept, and another is modern concept. You can go by analyze by the traditional concept, that is real account, personal account, and nominal account golden rules, or you can also follow the modern concept, modern approach. Assets, liabilities, expenses, revenue, capital. Asset increase debit, asset decrease credit. Liability increase credit, liability decrease debit. Revenue increase credit, revenue decrease debit. Expenses increase debit, expenses decrease credit. In this way, capital increase credit, capital decreases, that is drawing. Capital decreases drawing is always debit. In capital when you introduce the money in the business, capital is increasing, capital is always credit. Capital is always credit, capital increase credit, capital decrease means drawings is always debit. So this you have to remember in the modern approach. Asset increase debit, asset decrease credit. Liability increase credit, liability decrease credit. Expenses increase debit, expenses decrease credit. Income, revenue increase credit, revenue decrease debit. And capital increase credit, capital decrease debit. So this you have to analyze by the either you can go through the golden rules of accounts also. That is traditional approach. Real account, what comes in is debit, what goes out credit. Nominal account, all the expenses are debit, all the income are credit. Personal account, debit the receiver, credit the giver. Any one rules you can follow. Either the golden rules of accounts, traditional approach, or by the asset, liabilities, income, that revenue, expenses, capital, liabilities. With this also modern approach also you can follow. Any one you can follow. So determining the account affected, which account is involved. So that one. So determining the account to be debited or credited by applying the rules of debit and credit. So first one is, there are three steps here. First of all, determine the account that are affected. Which account is affected? You have to identify that. Next account is, you have to find out the nature of the account. Which one, either it is, if you go by the traditional approach, which one is real account, which one is personal account, which is nominal account, that you have to find out. Otherwise, if you are following the modern approach, modern concept, modern approach, either it is an asset or liability or capital or revenue or expenses or capital, that you have to identify. After that, third step is, you have to apply the rules. If you have applied the rules, which method you have, which modern approach you have followed, or you have to follow traditional approach. So with that rules you have to follow to find out the debit and credit. So in this way, these are the debit and credit rules of journalizing. So journalizing, so this is the first journal, is the first books of account in which the transactions are recorded in a chronological order as soon as it takes place. There are at least two accounts that are affected, that is recorded here in the journal. One account is always debit, another account is always credit. There is a short description followed after the journal entry, that is called as narration. So this is about the theory of a journal entry. So after that, the next class I will be showing you the practical portion of this journal entry. Thank you. So hope you have understood the journal entry. So go through the, I will be also sending you the notes of this journal. Go through the notes and also try to understand yourself also. If there is any doubt, you can ask me. Thank you.